Welcome back to Monetize Forum 2021. We're continuing with our keynotes. My name is Igor Stenmark. I'm one of the co-founders and managing director of MGI Research. And our next session is focused on CLM, or Contract Lifecycle Management. So this is one of the disciplines in technology in general and in monetization, as well as in procure to pay cycles, as we think is probably one of the most underrated in importance and probably least understood, poorly understood. We oftentimes ask our clients when they say, well, we have a leftover budget at the end of a year, and our question is, well, have you invested anything into CLM? And oftentimes the response is, what the heck is it? And why should we care? So let's go through this little introductory presentation here, and hopefully coming out of it, you will have a much more clear understanding of why this is important and why this should be attended to. So let's start with some key issues. What are the factors driving adoption of CLM? What's behind that? What are the tailwinds? What is the business case for modernizing CLM? Is there one, and what does it look like? We've introduced something in the last few years called 6-stage CLM maturity model, which helps both suppliers and consumers of CLM kind of understand where you are in your maturity cycle, where can you go, what to expect. And last, how should organizations plan and organize for CLM adoption? So what is contract lifecycle management? In very simple terms, think of your contract cycle. You start with some initial terms. Maybe you're managing an investment or you're purchasing something. You draft some general terms. You negotiate with some horse trading going on. And then it goes for approval, signature, and goes into contract execution. And then it becomes a piece of paper, a piece of electronic paper. It sits in some safe storage cabinet, hopefully, and very few people pay attention to it. And that's probably a mistake. It goes into amendment, eventually renewal, and potential replacement. In our view, CLM as a capability can help companies transform their contractual relationships into what would be a persistent and actionable system of record for the entire enterprise, akin to what ERP has become for financial information. So think about it not just in terms of, oh, I'm going to invest into this and automate Office of Legal Counsel and they'll be very happy with us. That's important, but that's not the only reason why you should be paying attention to CLM. Because contracts, especially in a B2B setting, contain a wealth of information, but the rest of the enterprise needs to have access to. What's driving CLM? Why is this still a challenge? Hasn't this been solved before? For the most part, the growing complexity of a business, as we know it, is a major driver for increased CLM adoption. Companies are just finding themselves unable to really handle the volume of contracts, the complexity of contracts. If you are selling something complex or you're buying something complex, you're negotiating all the time. Contracts may end up being different. Salespeople negotiate their own terms and conditions. There's a lot of opportunity to fall out of line for standard terms and conditions. Legal teams are really not able to keep up in many cases. They end up bringing in temporary labor, lean in on outside counsel to help them. It's expensive, it's time consuming, and oftentimes it's not very effective. Growth in global M&A, companies buying companies. Try to buy a company which has 10,000 contracts. Not so easy. You'll probably focus on maybe the top 10%, top 20% and sample those and see what's inside. But in reality, a lot of it should be done by mechanized tools. So there are a lot of reasons why this is important, and we often are amazed how underrated this discipline is. In this conference, we are putting a focus on CLM more from a monetization standpoint. So I'm going to define what we mean by monetization. This is a business practice that allows companies to convert opportunities into money. So take an opportunity from all the way from prospect and taking it into a sale, cash, revenue and reporting and disclosure. And this is not a product or a single business process. It's, again, a practice that's supported by tools, people, and workflow. In conjunction with monetization, we often refer to what we call Agile Monetization Platform, or AMP. This is a reference architecture for monetization to try to communicate what are the key components of monetization, and contract management is a very important element of that. If you look at AMP not only in the context of key functions unified by common service bus architecture, but look at it in the context of key processes, what the company does, deals with through monetization, you will see that every element of monetization, billing, configure price quote, revenue recognition, e-commerce, all those areas either need to get information from contracts or we need to supply information into a contract repository of some sort. How do you know that you have a CLM issue, that you need to be paying attention to this? You may have seen us present in the past what we call the 13 deadly sins of monetization or billing or CPQ. Well, this is one for CLM. And think of this as a checklist. If you read this list, and I encourage you to peruse it once the conference goes into on-demand mode, and you find that one or two items on this list apply to you, you should at the very least learn more. If 4 or 5 apply to you, you need help and you need to call an advisor and get assistance here. So examples here are delays, what you see in getting transactions done, as I mentioned, financial, IT, customer, supplier audits, recognition of revenue can often fail or be not efficient. So there are lots and lots of reasons why CLM is not working. And those symptoms indicate that you probably don't have the right process in place. Your legal team does not have the right tools at their disposal. So that's why we think CLM modernization is one of what we call the low-hanging fruit in monetization and in digital transformation in general. So a lot of the thinking around CLM has been centered on the automation of the legal functions, kind of focused on the Office of Legal Counsel, maybe on contracts. But in reality, if you think about the enterprise more broadly and say, okay, there's the core where we have the legal, the contracts, corporate, finance, manufacturing, R&D, human resources, and so on. And then on each side of that, there's either a monetization function, think of it as a downstream portion of a business, and there's the upstream portion of a business on the left, procure to pay, which deals with bringing in input materials and input costs into a business. So you have broad applications for CLM in all of those areas. In this conference, we primarily concern ourselves with the monetization context, but in our research and coverage of CLM, we think a bit broadly and not just in the context of monetization. The business case for CLM is pretty robust. Higher productivity, lower compliance costs, more predictable compliance costs, reduced and again, more predictable legal costs, reduction in litigation expense, reduction in disputes, reduction in M&A costs, agility, faster contracts, faster quotation times, more predictable M&A timing. And then very importantly, significantly improved precision of your execution in the business. If you can get access to contract data in a programmatic fashion to your sales operations, invoicing, customer service, a customer calls up and says, I need help. Either you say, well, we don't know you, or we don't know what you're entitled to, or you go and look up a contract. Not so easy today to look up a contract. So having this programmatic access that kind of assures that the customer service staff know exactly what level of service, what the entitlement is for any particular customer. That's just a very simplistic example of that. Same thing with payments. Then to receive payment and then to pay somebody, that has to be according to the contract. It's not necessarily all a cookie cutter approach. Same thing with pricing. So this improved precision is one of the key drivers for adoption for CLM. Historically, CLM already has had a wave of modernization over the last, you could pretty much say 20 to 25 years. Focus was on eliminate paper, go from paper to PDF documents, electronic documents, set up safe data rooms, automate signatures. That's really taken off in the last few years. Mechanizing approvals. That's also a big one. But as valuable as it is, that by itself is not enough to really make meaningful progress in this area. One of the key aspects of the change that's occurring in CLM is the shift from coarsely granular contract documents, one big piece of paper put into electronic form, to data, to very highly granular data elements. An ability to provide access to those data elements, essentially give each data element on the contract its own IP address, to turn your company from a data company to what we call the Internet of Knowledge, or a knowledge company. And that is going to be an ongoing process. We are kind of in very early stages of this transition, but it's a very important point here. And if you take anything away from this presentation, this is the point that I'd like for you to remember: this migration away from just document orientation and going straight into data and making it very, very highly granular and precise. We constructed a reference model for CLM to represent what we call the 6 stages of CLM maturity. This is a model that can be used by technology providers on one end, and can also equally be used by technology consumers. So you can almost go through the stages here and mark yourself up and say, well, I am at stage 4 or stage 3 or stage 5. I'll quickly introduce the stages. Stages 1 and 2 deal with basic automation. Stage 1 is capturing of the documents electronically. Stage 2 is capture of a signature. This is becoming a much more popular process now. Very few, especially with the pandemic, there's been a huge push towards electronic signatures, and that's only going to continue. There are now also advanced technologies that support authentication of almost anyone at a very advanced level. So not just through email, but by other means. So there's a lot of opportunity to develop here. Stages 3 and 4 deal with workflow automation, automating the approval cycles. And stage 4 deals with offering automation, enabling legal teams, contract teams, procurement teams, sales teams to bring together standardized contracts from elemental components and make them comply to overall corporate guidelines. Stage 5 dives into what we call contract intelligence. What's inside my contract data? How many contracts? Of how many parties? Where do I have obligations? Where do I have entitlements? Where do we have gaps between what's in the contract, how something is priced in the contract, and how something gets invoiced, how something is described in the contract from a service standpoint, and how it gets serviced. And when stage 6 gets into this data aspect of it that I mentioned on a previous slide, what we call a contract execution, saying, let me give you programmatic access to the data on the contract sheets, and then use this data to enable execution of service delivery, product delivery, billing, order management. It's kind of the constitution that everybody follows. Where are some of the users right now in terms of adoption of those different stages? For the most part, we see a real separation depending on the degree of kind of aggressiveness, if you would say, of technology adopters. Companies that are really what we call type A companies, that are aggressive adopters of technology, very technology leads. Many of them have gone for stages 3 and 4, maybe not for the entire enterprise, but for a big chunk of it, and are now putting their toe into stage 5, some in more significant ways than others. with more mainstream companies, which is the majority of organizations out there. They are generally at stages 3.5 going into 4, and that's going to accelerate probably in the next couple of years, where more tools now available for advanced document management, in addition to core CLM capability. And companies that are more conservative, where technology is not as important, they are the ones that generally now deal with stage 1 and stage 2, and there's still a lot of paper that's changing hands. So we think this is a very overlooked market, although many institutional investors agree with us and think that this is an exciting opportunity and are pouring money into this space in a big way. We project, based on our forecasting model, we have been projecting an annual compounded growth rate of about 36+%. We think that the market in 2021 will get almost to $2 billion, just under $2 billion in revenue. This is for cloud-based CLM solutions. And in 2022, we'll surpass that, go over $2.5 billion. And as impressive as this growth may be, the numbers in terms of the size are still relatively minor. Think about all of the spending that companies have made, all the investments that have been made in the ERP area. At some point, CLM will become a much more significant portion, kind of a share of wallet, in terms of both technology spending as well as technology spending driven by the business side of the house. So we're pretty active in tracking this market and continue to be fairly optimistic about its growth prospects. The marketplace itself, the marketplace of the suppliers, that's a different picture. It's a very fragmented space. There are a few strong big players, and there are a lot of small strong players as well, that kind of focus on specific segments of a market. But it is a market that's very fragmented, and we think that there's probably going to be some level of consolidation in this space, although it's not a simple thing to accomplish necessarily. We think that the example that was set by Aptus Congo, when they combined the high-end document management and mid-tier document management with a fairly high-end model for CLM, that seems to be very synergistic, and it seems to work well. And we think that it may be an example for our transactions in this space. We also see opportunities for economic consolidation at the lower tiers of the market, where companies maybe have stage 1, stage 2, maybe even stage 3 offerings. They could combine and generate a larger, stronger company where 1 + 1 could be 3 and 3.5 as opposed to 2. We expect DocuSign to continue to expand its footprint bottom up. We started with Signature. We bought a company, SpringCM, which had a CLM solution. We bought capabilities, some AI capabilities to add to that. And we think that we have sufficiently deep pockets to be able to continue to expand in this space. Notably, Salesforce does not have a formal CLM offering today of its own. It's more of a partnership opportunity. We think there's going to be a pretty healthy market in trading some of these AI companies. There's a lot of interest in that, and many of them have fairly straightforward ROI propositions. So we see more capital flowing into this area. How do you assess suppliers in this area? Undoubtedly, many of you would be evaluating solutions and looking at functional fit, operating fit. That's all good. We do a fair amount of work in helping companies evaluate potential suppliers and construct shortlists. One of the tools that we use and work with when we work with our clients is to use the rating system, MGI 360 ratings, where we rate companies based on a scale of 0 to 100. It's equivalent essentially to a risk rating of a business. And we look at things like how strong is the product, how deep is R&D bench, how strong is the management team, how competent, what's the track record, what's the vision. We look at channels, Do we have with sales teams in place to deliver this product? Do we have a strategy that's compelling and durable? And does the company have the sufficient financial strength and financial backing to really be a force in this market? In conjunction with that, we also use another mechanism, what we call MGI use case map, which maps vendors and users according to the actual use case. So it's not just the functional capabilities, but the characteristics of the target companies where a particular solution has had success, such as, is this company selling physical goods, digital goods, domestic or global, direct selling, direct to consumer, or a multi-tier channel system. So a lot of different characteristics that define a business case and kind of try to match, help you find your vendor mate, if you will. In terms of CLM trends, we see two kind of major streams. There's one set of trends that we call of growing importance, kind of a persistent trend. And then things that are emerging. In growing importance, we see contract intelligence with stage 5, really picking up steam. We see integration picking up steam, where more and more companies across the spectrum of money, both monetization and also procure to pay, are very interested in how they can achieve granular, programmatic level of integration. That's going to continue. Then on an emerging side, there is investment flowing into applying some of the AI tools. Generally, we are pretty skeptical of companies making claims about AI and ML, especially the fact that so much of that technology is becoming rapidly commoditized by some of the larger platform players like Amazon and Google and others, IBM. But in this particular case, in the case of CLM, this is completely valid and needs to be paid attention to. Then the other item that we see that's important is, as I mentioned, contract data instantiation, giving visibility to your data globally within your enterprise. And then another kind of a popular buzzword, blockchain. Again, normally we are pretty skeptical when companies make claims in this area, but there are concrete applications of blockchain in contract management. And we've seen examples for compliance use, for partner management. So there's a lot of opportunity for innovation in this area. Is it something that's going to be number one, front and center in terms of investment priority? Well, if somebody only can do signatures right now, we're not going to jump into blockchain right away. This is really reserved for companies that have gone through stage 3, stage 4 already, and we're in stage 5 and 6. And those are the ones that really can take advantage of it. Anyway, that's all the time we have. I'm going to summarize quickly here. What are the big important takeaways for CLM? We have 4 major shifts undergoing in CLM. We're going from early adopters, aggressive adopters, into much more of a mainstream. This is going to become a mainstream conversation topic. We're going from adoption in legal departments only to multifunctional adoption, where different areas of a company, procurement, monetization, sales, service, all those areas want to have access to tools in this area. We're going from departmental adoption, where you may have many departments adopting these technologies independently, to much more in concert enterprise adoption. And we're going from a document coarse grain orientation to a fine grain data orientation for CLM. Hopefully this gave you a bit of an introduction to CLM and something valuable you can take back into your organization. If you need help, if you want to just chat with us, feel free to get in touch with us. We'd be happy to hear from you, and hope that you have a great remainder of Monetize Forum 2021. Thank you for attending.